Private hospital delivery costs in Tier 1 Indian cities like Bangalore and Mumbai are inflating by 10 to 15% every single year. Today, a normal delivery costs approximately 60,000 rupees. For a C-section in a premium hospital, that bill frequently exceeds 1.5 lakh rupees. A C-section or cesarean section is a surgical procedure used to deliver a baby through incisions in the mother's abdomen and uterus. Faced with these rising costs, many young couples wait until they see 2 lines on a pregnancy test before applying for maternity insurance. Dr. Prashant notes that this is the most significant financial error a couple can make. Attempting to secure coverage after conception is like trying to buy fire insurance while your house is already on fire. Indian maternity insurance requires multi-year foresight. It cannot provide immediate financial relief for an existing pregnancy. Retail insurance providers in India do not offer day-one maternity coverage to individual applicants. Immediate coverage is a feature typically exclusive to corporate group policies provided by employers. Couples often purchase a new comprehensive policy mid-pregnancy, expecting it to settle their upcoming hospital bills in full. This assumption leads to automated claim rejections at the hospital discharge desk, leaving the family responsible for the entire balance. If you are already pregnant, your viable financial options are limited to corporate employer cover or direct cash savings. The primary obstacle in any Indian health policy is the waiting period. This is a mandatory duration during which you must pay premiums, but the insurance company is not yet liable for any pregnancy-related expenses. Market standards range from 9 months to 2 years, while some policies extend to 4 years. The countdown begins strictly on the date the policy is issued. The timing of conception does not influence this clock. If a policy has a 24-month wait and the baby is born at 22 months, the insurer will reject the claim entirely. You must surpass the full duration before delivery. Note that insurers often treat an ectopic pregnancy, one that develops outside the uterus, as a standard medical emergency rather than a maternity claim, which involves a different waiting period. Miscalculating the timeline by even a few weeks can result in the total loss of your expected coverage. Once you have cleared the waiting period, the policy's full maternity benefits become active. Coverage begins with a 30-day pre-hospitalization window for medical tests and consultations. The core benefit covers the delivery room, operation theater, and surgeon fees for both vaginal and C-section births. It also extends to 60 days of post-hospitalization care following your discharge. The most significant inclusion is newborn baby cover, which provides medical protection for the child's first 90 days, including stays in the NICU. A NICU, or Neonatal Intensive Care Unit, is a specialized intensive care nursery for newborns who need high-level medical monitoring. This creates a total 6-month window of financial protection for the family, starting before the birth and continuing through the baby's first 3 months. Even with an active policy, families often face a secondary restriction, the maternity sublimit. Consider a policy with a total cover of 10 lakh rupees. If it has a maternity sublimit of 50,000 rupees, the insurer will stop paying once that cap is reached, regardless of your total sum insured. If your hospital bill is 90,000 rupees, you are responsible for the remaining 40,000 rupees out of pocket. Policyholders also encounter room rent capping. Many standard plans only pay for a general ward or a twin-sharing room. If you choose a private luxury room, the proportional deduction rule applies. The insurer will reduce their payment for the surgeon and theater fees to match the rates associated with the cheaper room category. Between sublimits and room caps, a maternity policy often functions as a partial discount on the total bill, rather than a full financial shield. Specific medical procedures are excluded from standard retail plans, including infertility treatments like IVF or IUI. IVF, or in vitro fertilization, and IUI, or intrauterine insemination, are medical techniques used to assist with conception when natural methods are unsuccessful. Parents must also pay for non-medical hospital items, such as diapers, baby clothes, sanitary pads, and administrative registration fees. There is also an age limit for new applicants. Most insurers will not provide first-time maternity cover for women over the age of 45. These policies are designed strictly to finance standard births within narrow medical and age boundaries. If you are planning to conceive in the next 1 to 3 years, you must verify 3 specific details before signing a policy. First, confirm the waiting period is under 2 years. A 4-year wait is mathematically ineffective for near-term planning. Second, ensure the C-section sublimit aligns with the actual costs charged by top-tier private hospitals in your city. Third, check for day 1 newborn cover. Without this, your family is fully exposed to the high costs of emergency neonatal intensive care. Request a formal, projected delivery cost from your doctor today to determine if a policy's sublimits are actually sufficient for your needs. Managing the high cost of Indian healthcare requires treating maternity insurance as a long-term strategic investment rather than a last-minute purchase.